Tesla, the electric car maker and leader in autonomous driving, has recently reported its third quarter earnings, and some analysts claim that the results are actually pretty disappointing. But what caught the attention of many seasoned analysts and investors wasn't just the tone of the content of Elon Musk's comments on the earnings call, but rather where Tesla could be in a few years.
Tesla taking a hit today after its lackluster third quarter earnings report. One of the key points investors walked away with was warnings around the highly anticipated Cybertruck. CEO Elon Musk saying on the call that Tesla dug its own grave with the Cybertruck. He also called it a special product and said products like it are, quote, incredibly difficult to bring to market, to reach volume, and to be prosperous.
Netflix in like 2011 to 2013 went through a weird transition of renting DVDs to streaming. And it was a problematic transition. It wasn't communicated well, and the stock suffered. Here, I think what's happening is Tesla is trying to make this transition very gradual and communicate to investors gradually what they're trying to do without just yanking the blanket off the rug.
Recently, Tesla dropped some bombshells on Tesla's Q3 earnings call, and it all came from Elon Musk. While the Tesla CEO expressed his concerns about the global economy and the high interest rate environment, he also noted that Tesla is focused on making its cars more affordable and reducing the cost of production. According to Musk, Tesla faces long-term challenges in scaling up the production of its Cybertruck, which is expected to start deliveries by the end of November. He cautioned that the Cybertruck would not generate significant positive cash flow for 12 to 18 months after production begins, and tempered expectations for the vehicle. Elon Musk also talked about Tesla's progress in AI development and autonomous driving, and announced that the company is planning to build a new factory in Mexico. Today's video is going to explore some of these comments by Elon Musk and why they matter, and what it means for Tesla's future. So stick around and watch until the very end as we explore the key factors that investors should stay focused on rather than worrying about lower than expected earnings.
Yeah, I wasn't actually that surprised, honestly, by the gross margin print. I mean, they took some production intentional shortfalls this past quarter for upgrades. Musk definitely had some commentary on 2024 that kind of spooked investors. Cybertruck comments you pointed out. Mexico facility, which means we won't have these millions and millions of Model 2s out there. But I think ultimately we're all missing the greater point here, which is I think Tesla is slowly trying to pivot away from being a huge volume car maker and into becoming a tier one supplier to other OEMs. We've seen what they've done with charging infrastructure. They're making so many batteries subsidized by the US government. They do power electronics, the biggest maker of these. I think they sell these things to OEMs and then ultimately get really what they want, which is licensing and selling FSD, which is really the profit center and gets them to the next step, which is robotaxi. So it's part of the roadmap that begins with cars as a proof of concept and migrates to becoming a tier one supplier and then eventually a robotaxi maker.
In his latest comments, Elon Musk sounded pessimistic about the state of the global economy, the challenges of making Cybertruck, and the need to make Tesla's cars more affordable. He also revealed some details about Tesla's plans for a new factory in Mexico and the progress they're making on FSD technology. So what are the details about Musk's comments on Tesla's earnings call? And how does this affect Tesla stock and Tesla shareholders? Well, let's find out. Hey guys, welcome back to Tesla Tomorrow. Tesla's business falls in line with the global effort to reduce global warming. And as more countries embrace electric vehicles and governments incentivize their adoption, Tesla's growth potential in 2023 is becoming more promising. Most countries with EV policies are aiming to reduce emissions from petrol cars, which, without appropriate laws to mitigate them, can lead to a big climatic change in the coming years. For instance, the Canadian government has set mandatory targets for new light-duty cars and passenger trucks in the country to be zero emission by 2035. As more people start to consider buying electric vehicles, more governments around the world are likely to adopt similar policies in the future. But what does this mean for Tesla, and will things improve for them? Keep watching to find out your answers. Before we carry on though, if you like this type of content, hit that like button, subscribe and turn on post notifications to keep up to date on everything going on with Tesla. Tesla has achieved production efficiency and scale that enable it to lower the cost and increase its margins. The automaker has invested heavily in building its own battery factories, such as the Gigafactory in Nevada, where it produces its own battery cells in partnership with Panasonic. Tesla also uses vertical integration to control most of its supply chain stages, from design to delivery, and this allows the car company to reduce its dependence on external suppliers, optimize processes, and further improve its quality and speed. This Tesla's production efficiency can help it to achieve economies of scale and lower its battery costs, which are the main components of EV costs. This strategy of lowering the cost of its cars is one of Tesla's ways of ensuring sustainability and making a green environment possible through its cars. In the words of Tesla bull Ross Gerber, there isn't a more compelling time to go green than now, and this can be done by opting for electric vehicles and installing solar panels at homes. According to the analyst, there is also an increase in the demand of EVs at a rate that has never been seen, and this is very true, and it is seen by most EV markets globally. For instance, about 2.4 million EVs were delivered in mainland China for the first half of 2022, which is about 26% of all car sales in the country. However, in that same period in 2021, EVs were only 10% of the car sales in China, indicating an increase in demand for EVs in the country. Similarly, in Europe, it's seen a rising number of EV sales, up to about 1.1 million EV deliveries in the first half of 2022, a 20% rise in car sales, while electric vehicles represented 6% of all passenger vehicles delivered in the United States. Several countries globally are actively adopting clean energy solutions, so long-term investors should really be on the lookout for companies that have their businesses aligned with this. Coupled with the expectations with price hikes in oil prices, investing in Tesla and the EV theme in general should be one of investors' main focuses in the coming years. Even Ross Gerber confirmed investing in EVs and Tesla could be one of the most important investment schemes over the next decade. Tesla's got a huge lead over other automakers in terms of innovation, tech, brand value, and customer loyalty. And the automaker is constantly developing new features and products that appeal to the growing market of EV buyers, like the Cybertruck, Model Y, and FSD software. Tesla has a strong brand identity, and it's associated with environmental sustainability, social responsibility, and visionary leadership. These factors give the automaker a competitive advantage over rivals who are struggling to keep up with Tesla and its price and quality. Tesla has created a supercharger network that provides convenient and fast charging options for customers in the US and around the world. And it's also got a diversified portfolio, which is intruding on other businesses that complement its core automotive business and create new revenue streams as well. The company's expanded also into the energy sector with things like Powerwall, Powerpack, and Solar Roof. These products allow customers to generate, store, and use renewable energy for their homes or businesses. Tesla also plans to launch a new service like the Tesla Network, which will allow customers to share their vehicles or use them as autonomous taxis. These businesses will also enhance Tesla's value proposition and create synergies within its automotive business. Tesla has a strong positive story, and investors have pretty much nothing to worry about when it comes to Tesla's future. But what do you think? Is the future still bright for Tesla? Let us know what you think down below in the comments. And for more exciting updates on Tesla, go ahead and click on this next video on your screen. See you there.